Well, good morning and good evening to where you are located around the world. My name is James. I'm here on behalf of Pivot Point Trading, bringing you a Monday morning market update, local time, Australian time, dated Monday the 24th of February 2014. Of course, this is prior to moving into the trading week in the US. What I'll do for you this evening is take a look at the Dow Jones Industrial Average and really get a theme for what the market looks to be doing for the week and months ahead. It's quite interesting that you join me this evening. This, I do believe, will benefit you greatly, especially with the market tone and the market outlook potentially shifting from that of a bullish pattern or a bullish trend into some form of an intermediate or even primary trend reversal. Very, very interesting signals. So again, I'm glad that you're here with me. Let me just run through some actual analysis, which is really going to confirm what I've just alluded to. As you can see, we've had quite an abrupt, volatile, a little bit of a panic start to 2014. We have seen quite a bit of a retracement in the market. Is this the retracement, or is this the only retracement until we get the next bullish leg higher? Personally, I do not think so. My hunch is telling me that this market wants to roll over and move lower. Now, the reasons I say this is because if you take a look at the larger term or the longer time frame, you can see for the most part of 4 to 5 months, we've actually been establishing what could be a head and shoulders topping formation on the Dow Jones Industrial Average. This is a very, very important terminal reversal pattern that you need to pay attention to. Where we're trading to at the moment, at the current juncture anyway, is the possibility for what we call the right shoulder. Now, the right shoulder usually occurs on pretty dismal volume. As you can see, the volume has actually been contracting on this bullish leg higher, and what we've actually done is just rally into old resistance, as you can see, which took place in November 2013 and also December 2013. On top of that, if I bring up what we call a Fibonacci support and resistance, if I take the selling wave which really occurred at the start of 2014, you can see that we've actually retraced 0.618 of the bearish move. This is a very, very interesting ratio. It is a Fibonacci ratio, and as you can see, if I just get rid of this tool that I've just brought up and let me zoom on the detail, you can see around this level it also coincides and moves in conjunction with this resistance level. On top of that, we've got a various array of bearish candlesticks. We've got shooting stars, bearish haramis, spinning tops, all in all on pretty dismal volume, telling us that really the bulls are not committed to this most recent rally higher. On top of that, we can also switch to our oscillating indicators, and as you can see, we've actually set up divergence across the Dow Jones Industrial Average. Usually the divergence itself is from December to January. As you can see, we made a higher high on price, but we really made just a relative high on the MACD, telling us that the momentum, or the bullish momentum, which has really been in effect since 2009, is really starting to slow down. So this is very, very ominous signals. On top of that, the stochastics is overbought up at this resistance level, and it is due to cross down for the next wave of bearish pressure. Again, the RSI is in no man's land, sitting here telling us that the signal itself is very, very neutral. On top of that, if I go into what we call Dow theory, there's really two parts of Dow theory which really apply to the market at the moment. Number one is that the actual indices, they need to confirm one another, i.e. if one index is breaking out and making all-time highs, or at least making a multi-year high, then so should the other two US indices. So if you take a look at the Dow Jones Industrial Average, where we're trading at the moment is definitely quite a ways below the most recent high established in January 2014. When you look at the NASDAQ, in comparison anyway, most recently we've broken out and we're actually trading above that relative high made in January 2014. If I take a look at the oscillators on also the NASDAQ, you can see some incredible bearish divergence going on between price and the actual MACD. Again, the primary function of MACD is to develop and really show traders where divergence is taking place and to allude us to what could be major turning signals in the overall market. In addition, the final thing I want to say is that when we talk about Dow theory, really one of the most important tenets of Dow theory anyway is that a trend is assumed to be in effect until it's given definite signals of a reversal. So although there are a lot of people who are starting to come to this sort of bearish hypothesis and theme for the market, what we really need to understand is that, is the market making a series of higher highs and higher lows? And relatively speaking, that sort of perspective is starting to change. It's starting to transition and it's starting to break down. As you can see here, we've made lows in April. We've made a higher low in June 2013. We've made another higher low in August another higher low in October, again in December 2013, but this is where the picture gets a little bit interesting. As of the low made in the subsequent sell-off in January 2014, most recently right here, if I can just bring it to your attention, we've actually established a lower low. Now this is very interesting because at the moment we are also establishing what we call a lower high. As you can see here in February, we are not breaking above the highs made in January 2014. This is what we call a 1-2-3 reversal. We rally. Let me just zoom in on the detail. We rally, we pull back down to resistance, establish that lower low, we rally but fail to make that new higher high. This is where sentiment begins to shift and where the bulls can really become quite frantically panicked and start selling. This is the location anyway where the bears, or where you would expect bears to come in and start selling this market lower. As you can see, I've got two triggers set. I keep pushing the buttons, my apologies. We've got a bullish trigger here at 16,250 roughly. In the event that the market wants to, again, break higher and trade up to 16,470. However, I also have this bearish setup down here at 15,961. In the event that we do get a close and a continuation below this, really our next target is all the way down at the swing low here at 15,431. So looking at this from a risk reward perspective, there's definitely more opportunity to the downside when we take a look at the 3 US indices. All right, so that's a pretty comprehensive Monday morning market recap leading into the trading week beginning Monday the 24th of February 2014. If you have any questions, post them below. Other than that, ladies and gentlemen, this trigger is below, or this bearish trigger is below our 3 exponential moving averages. They are moving sideways. Our long-term simple moving averages are bullish, but again, we can break down and trade down to that 200 very, very quickly. Again, our oscillators are all giving us pretty much sell signals, and there is very, very strong divergence taking place in the market. We are also turning down on the ADX. So the ADX turns up when it likes a move. As you can see, this bullish move, it's actually turned down, telling us that, hey, it's not very healthy. It's not something to get on board with. Also, the CCI is down below the trending line. When the CCI breaks above the 100 line, usually a market trend. So during this period here, when we break out above old resistance levels, you can see the CCI maintain itself and really compose itself above that 100 line. Right now, we're really starting to see this CCI break down, telling us that the bearish trend, or at least the bullish trend anyway, is starting to break down. Very, very interesting signals. And to finally finish with, Bollinger Bands really not giving us too much information that can really add to our technical analysis picture at the moment. Again, if we do break above or below these 2 triggers, it will set the trade up very, very nicely and set the theme and tone for the market leading into this week's trading week. So again, if you enjoyed this video and want to learn how to actually trade the market, learn the technical analysis, so you can become autonomous in the market and make decisions for yourself, have a look at pivotpoint-trading.com, sign up for a free scholarship and get your education underway for free. All the best, everyone. I'll provide you with another Monday afternoon market recap and also a Wednesday afternoon and Friday afternoon for this week. All the best, everyone. Goodbye.